Hi, Fari.
Hi, how are you?
I'm good. Thank you so much for taking time out of a busy day. I know you're active in stock indexes and individual equities, and really appreciate you coming to our community today to speak with us. I notice you're an author of a book, Master Traders.
Right.
Is that similar? I didn't read it, Fari. Is that similar to what Jack Schwager did with Market Wizards? Did you go out and interview? Uh,
No, no. It was the same concept but different because
okay. In what way?
times have changed. We have internet, we have platforms,
Yes.
and
Good.
unlike Jack Schwager, I'm a trader. He's a book writer.
Oh,
So what I did was I didn't have the time. So I told Wiley for 3 years. I said, "Look, I'll do it, but I'll do it my way." And they said, "Why?" And I said, "Go and see Patton. Understand Kasserine Pass. If you understand it, come back, we talk." It happened twice, and the third time they accepted it. And the concept was this: I'll bring a bunch of traders in that are good. They may not be wizards, but they're going to be good. But they got to speak. They're going to write their own chapter, and they're going to put it. I'm not going to interview anybody. I'll edit it, but I'll have 20 pages and 8 charts maximum, and we'll put a book together that's for these days and will be a classic because it'll involve different market time interval of trading and different
you
markets.
know
Like
that's a great point because things have changed with programs and HFTs,
I know you.
algos. You know, the
No, also
Market Wizards was bought, was written during open outcry. So
exactly.
you're right. The
And it
nature
was a
of
lot of interviews. A lot of the interviews. Hey, how did you do that? What was your what did you do? Who was your mentor? All that. What I did, I said, listen, guys, give me something that people can to the authors. Give me something that somebody who's interested gets the book, sits there, and says, you know what? I'm going to open up my online platform. Maybe I can put that in. Either it's a program or a concept or an indicator, whatever it is. Tell me how these guys are doing. Maybe I can replicate it. From reading Schweiger book, you could never replicate what those guys did. What's the value?
great point. Let me ask you this. I'll ask you the same question I asked Jack. Of the
Sure.
people that were in the book,
Yes.
who was your favorite? Who were you most impressed by their
The two.
presence?
It's
And
very simple. My two mentors. The guy who was on the cover of the book, Gil Caffrey, runs $40 billion cash plus leverage at Tiger, head of Tiger Trading.
okay,
It was my classmate at Princeton, and it's discussed in the book. He's the one on the silver crash, March 28, 1980, on Thursday. I called in and I said, "What do I do?" He was on the floor of NYC, about 3 years in the market at that time. And he says, "It's a crash. Buy everything. Buy America," and hanged up.
I remember
Next day,
that silver crash after
yeah,
they changed the rules on the Hunt brothers, and
exactly.
that was $50 silver. That was the Russian invasion
Yes,
of Afghanistan at the top in 1979, 1980. So, wow, you go that far back. How come you don't have any gray hair?
I do have a lot of gray
All
hair, but
right,
I
your
hang.
photo does. It looks like you're.
But that was 19. That floor is 19
Oh,
2001.
okay.
Yeah,
I thought
that's
maybe
all.
you just photoshopped your hair color.
No, no,
All
no, no.
right, listen, Fareed, you were
Yeah,
also
but hold
rated.
on, hold on. Let me
Oh,
finish.
yeah,
Let me finish.
okay,
Listen. This is patent. I go on my schedule, not yours. Hold on.
okay.
This is the issue. 729. Yeah, exactly. So you need to watch Catherine Pass. Here, 729 on the Dow. So my dad, that was my dad's money. He thought I was the smartest kid on the block. You buy anything at 729 on the Dow, and it takes off like it did. You're a smart cookie. Well, not that easy. The other guy I was impressed by was Steve Shulman, the guy who wrote forward to the book, chief advisor to Soros, head of technical analysis for Lehman, head of options at Merrill. And then the opening
I'm
chapter,
familiar with that name, Steve Shobin, right?
yes,
Yeah.
yes, and his protege is Jeff DeGraff, which is this is a celebrity technical analyst. I mean, there's other guys. He hardly shows up on CNBC because he's not a talking head. And when he talks, people listen. Jeff DeGraff. What an honor to have him on board. I actually took a call from Steve Shobin to get him involved because he's a very busy guy. He knows what he's doing, and he's done a great job for major hedge funds in terms of advice and direction. So between those two, they were impressive. Now, in terms of the contributors, I was very familiar with most of them, but one guy I wasn't. That was Jeff Spots, and he came in because we had a cancellation. We had a fellow who could not make it due to some paper issues, whatever, and Wiley wouldn't agree with that. So remember, when you self-publish, things are easy. When you have a major publisher like Wiley, 200 years old in the business,
yes,
run by a bunch of lawyers, everything has to be kosher. But unfortunately, we had a.
What do you mean by that? Does the rabbi spit on the book?
He has to bless it and cost money, and don't bring shekels. He wants gold only. Gotta be gold coin. Yeah. Hey, come on. And I was in LA. I lived near Little Hi-Fi. You gotta go by the rules. Long story short, yeah. By the way, Little Hi-Fi is Pico and Robertson. So hey, for the longest time, I lived near there like 11 years. But anyhow, the point is this: there was some. Wiley requires you to write original stuff. This fellow, which I will not name, wrote a couple of stuff that was his own writing, but was pre-published. That's no good. Original means original. And he started arguing with us, and I said, don't argue with Wiley. They're not a small publisher. They're 200 years old. There's a reason they're in business. They started across NYC back in 1807. Wow. I said, don't argue with these guys. Move on. He wouldn't. So unfortunately, Wiley pulled out the trump card. He was out. We had to bring in a new person in. That was Jeff Spots. Very interesting guy. Why? He mixes two things. First of all, he used to run a hedge fund within Merrill Lynch, and his job was to take the people who went public at that time. Let's say Zuckerberg. They take your company public. You got to put your stock with them. These are the lead underwriters. He would manage their money as an in-house segregated family fund, if you will, okay? At Merrill. So he had a pretty good experience. But he combines, this is a chapter I want you, if those of you who have the book, take a look at. I think it's chapter 11. And look at how he combines fundamental analysis with technical, okay? But in a reverse order. He starts with technical. If the charts make sense, he goes and takes a look at fundamental. Fundamentals are good, then he goes in, and he's in for a long haul.
So he looks at the technicals and then wants to see if the fundamentals confirm what his charts are saying.
Bravo. Yes, sir.
Okay. You know what? You had some great mentors. You went to Princeton. These people that you've written about has helped you. You were rated top market timer. Was that via Hulbert?
No.
Where was that ranking?
Timer Digest. Timer Digest is much bigger than Hulbert. Hulbert is a good guy, but he doesn't do it as often.
Okay.
There used to be both of them in there. Your Timer Digest and Mike Hulbert. By the way, I love his book about counter or something. I forget his name. It's a great book he wrote back in the 80s when he was with Wall Street Journal. No, but Timer Digest has really just concentrated. It's a father and son out of Connecticut, actually Greenwich, and they rank top 150 timers. Of that, 125 probably, plus or minus, is in this SPX. There's some people on bonds, some people on
right.
Gold.
I'm familiar with Timer Digest. That is the number one ranking periodical out there. Right. You do specialize in stock indexes and individual equities, correct?
Yes, and there's a reason. SPX has the most internals. I am not here to make a guess. I will try, because market is violent enough. I feed everything to a machine. Remember, my background at Princeton was financial engineering, which back then people said, my dad said, what are you doing that for? Now you see why. We feed that to a machine, and basically what you have in front of you is a cockpit of 747. SPX has the most internals: advanced decline, up and down volume, trend, tick, at the S&P data, the detail. That's the stuff tells me what I should be doing, rather than what does news says.
Yes.
Because they say what, buy the rumors, sell the news. The market is made of a lot of smart cookies. We try and take money out of their pocket. It's not easy. And we try to do it legally, right? You put the money on the table. Unlike Vegas, you can take someone with off. In Vegas, you can't do that. But here, we're up against very, very smart people. So I want an environment where, first of all, it's very deep. SPX, there's nothing as deep as SPX. Maybe bonds are, okay? But bonds aren't moving these days.
Currencies are deeper.
Yeah, because you don't have any deep internals.
Right.
Currencies have no internals. And you have to know a lot of aggregate economics. Like, or maybe a Chef Lady would do that, be that smart. But I'm not that smart. I want the machine to look at it real time and give me. And there's no real time data on the British pound, for example, of the economy. Once in a week, maybe there's data comes up. I need something every second to tell me what to do.
Interesting.
Remember, updates on SPX come in on the average between 1 to 2 seconds at a time.
Okay.
There's always one of those pieces are changing. So I need to, what I believe is adaptive systems. Remember,
did you see the 60-minute show last night with Lewis about saying that the market was rigged? Did you catch that? And if you did,
no, I haven't yet. Michael is a Princeton guy also. It's he came after me. It's on my TiVo. I haven't looked at it yet. Okay. Again, I even watch TiVo according to Castrating Pass. It's on my schedule, not TV schedule. So I watch TiVo.
Okay. Do you think that the nature of the markets? It sounds like you have your own proprietary algos. Do you?
Many.
Okay.
I run 14 monitors here, 5 computers in Chicago, 7 in California.
Okay, and as far as what you're looking at with the current state of the S&Ps, we're having a relief rally. Putin, I know it's because of technical action, but the background news that Putin is pulling back troops from the Ukrainian border. A lot of people have tried to top pick this market over the last 6-8 months, including me. What's your work telling you on a intermediate term basis here in the S&Ps?
We are sideways here. Volatility the next 3 months is going to be very more than expected.
Can you share your screen with us?
Sure. Yes, of course. 1 second. Let me switch. Do that here. And go ahead. Let me bring my screen up for you. Okay. Go ahead and. You want me to share it or?
Yeah, go ahead. Click.
Yeah, I have
click.
to share.
Click to share.
Yeah. You're right. Sorry, I forgot. Yeah. But yeah, the only condition you had is that you call me. Yeah. I got. Sorry.
It's down there at the bottom. There's icons. There's red phone and click the plus sign. Okay, here we go. Okay, so I see McClellan, Breath Rust. HACI, those are your proprietary indicators, the bottom two?
Yeah, they're basically, CI is the momentum and trend combined.
Okay.
I don't know of any other indicator that does both.
And the bands you're using, are those Boley bands or something proprietary?
Those are no. This is what John uses. These are Sigma channels. Sigma channel comes from statistics.
Yes.
Statistics were created by Ottoman Empire 400 years ago. I don't think John was alive back then. So John is using these. And he and I have a big laugh about this. Sometimes not necessarily good laugh, because I used to live around probably a mile away from each other.
Yeah.
And he loves Persian food. So I would take him out to Marina for Persian food. And he would say, "You using my bands?" I said, "No, you're using Ottoman Empire's bands. You just call it Bollinger." Here's what he uses so you understand. He uses 2 sigma plus and negative 2 sigma and 0 sigma. I do believe if you go back and open these up, you'll see how they move. Once they get +1, +2, they move. Same way also on a move down. And they also bounce off with 3 sigma. That's something he doesn't use. And the reason this happened to me was very simple. One night I was very, very tired, and I entered the wrong parameter in the machine. I didn't get the right results, and I said, "Heck with this." Went upstairs, went to go to bed. I used to be this was in California, on the beach, Marina del Rey. And so when I got up in the morning, came back, the screen was still on. I usually turn off everything. I hadn't. I looked at it and I said, "Fari, you schmuck, that's wrong." But before I changed, I looked at it one more time. And it turns out to me, wait a second, I need -1. Look at this. That's -1. You see that?
Yes.
Okay. And look at this. This is -3. How come John doesn't use this? What's going on with it? So I started this journey called, hey, it's like Microsoft. We're no different. I didn't do this originally myself. John did, maybe, right?
Right.
And he's looking at stuff that really came from guys who started statistics. But wait a second, there may be a better way. And all you do is tweak it a little bit, understand it a little bit, get into it. One of my teachers was Bertrand Malkiel, The Random Walk Down Wall Street. I'm sure most of you guys have read it.
Yes.
He always kind of pounded to us, saying, indexes are a way to go. He's the guy who first started with, before Vanguard. He was the guy who was, I'm sure he's on board of Vanguard. He said, look, before we started index trading or managing portfolio managers for compensation based on index, he said, guys, index is important, but first understand what's inside your index. If you don't understand what's inside your index, what do you got? You're just you're shooting in a barrel. You really don't understand it. Here, let me tell you. Let me go here quickly for you guys. We're with time of digest. I'm negative, and as a matter of fact, you'll see a signal here. See that signal?
Yes.
Negative sell.
Yeah.
But I've been negative from here. Okay, I've been negative since here. I've not changed yet. This was good. I missed it. I got upset. I just walked away. Thank God we haven't really gone over it much, and it's still rotating. I think at the margin, we need to step back down a little bit before going up there. That's why I haven't changed it. So I'm taking a little bit heat there.
You think it could be as deep as your white line? Is that a moving average at 1750?
That's 200. No, I don't think so. Why? Because we have yellow put. I don't think we'll go below. I don't think we'll see us. We'll probably penetrate 1800. Past this 1732 here. Yeah. But I don't think us will get past 1770.
Okay.
By the way, when that does, you'll see, you'll be ready for a lot of selling. The problem is this: because of yellow put, you get all these guys coming in buying the dip.
Yeah. So does your work? A lot of the bulls are still looking for 1920, 1950. The super bulls are talking 21, 2200 in the S&Ps this year.
I projected with timer digest. We do it in December. It's published over 2000.
Over this year.
Yeah.
Okay.
Yeah. I'll tell you why. There is a yield input in play. There's no question. First of all, is what I've said back on the 7th of March 2009, 2 days before the low. We record these in webinars. The webinars are on our webpage. You go to Hamzei Analytics, and and there's a lot. All of them are recorded in a format. There you go, right here. News, educational webinars. You do need to put this codec in, but all these are recorded in a format we cannot edit. Go down below. There is a March 2009 webinar right down here. There you go.
Okay, so you were there near the 666 mark, the sign of the beast in the S&P.
Well, listen to this, yeah. And what I said is this, guys. Either we're done. That's finito. We're done. Because the next 1,000 points, remember, we're moving from 8,500 to 7,500 to 6,500. Okay, that happened November, whatever, end of November, from November 11th, then 24th of, October 11th, November 24th, then 2009, March 9th, I believe. This is March 7th, 2 days before, it's a Saturday. I said, guys, either this is a generational low, and we're going to go up like you've never seen before, or anarchy on the street because we have Second Amendment. Okay? Either we're done or we're going to go. Now, I said I would take the upper side play. Why? Because we can't have anarchy. This country still is the hope of the world, and this is the big economy with a huge military-industrial complex, and the 5th, 6th, and 7th Fleet, which was I had the honor of building F-18s for it. We will not be defeated like this easily. So what they're going to do is they're going to print money, and it's going to be tons of it. Okay, and then the other thing is this: interest rates are going to be kept low. And somebody asked, "How come?" Well, you never did the bonds. Why are you projecting that? I said it's interest expense. Go to a balance sheet. If they allow the interest rate to come up, given the ballooning of national debts, the interest expense will bust the budget. That will never happen.
Okay, well, here we are over 5 years later.
And interest rates have not gone up.
Okay, here we are 5 years later. Is the story shifting, or is it the song remains the same?
The song remains the same. We will go bust if the interest rates go up appreciably. It's going to be kept down below. I'm not saying it's been flat. I'm saying it's not going to shift much because we can't pay it.
Right.
It'll bust the budget. Then we won't be able to have food stamps. Look, we got triple or double the size of people on food stamps now.
I call it this kind of a silent depression because if people weren't on food stamps, there'd be breadlines.
The issue, what we need to do is make sure the military is strong.
Well, that we've been hollowing it out.
Yeah, true.
So are you worried about some of the geopolitical pots that are bubbling on the stove? Putin, Syria, China.
We'll go through that, but first let's look at lesson from history. If we don't watch history, if we don't remember it, we're condemned to repeat it. The Roman Empire went down because they couldn't put enough gold in the coins that were paying the soldiers.
Right. Yep.
So it's important for us to keep a strong economy and keep a strong military. Okay. And now Putin, I despise the fellow. Look what he's done to Grozny. My great grandparents came from that area, which is Chechnya and all that. It's all Persia. Back then, all of Caspian Sea was Persia.
Right.
Actually, Persian Empire was the second largest empire ever, 7 million square miles. The only one bigger than that was Tartars.
Right.
But that's a different problem.
Well, they were decimated in Crimea by Stalin.
Yes. Well, that's about 500 years difference in the events. Yeah. But my point is, Putin has grandeur in his head. Best way to fight Putin is not military. We got to get the oil prices down. That's the single. Well, listen, Putin is Saudi Arabia with nuclear weapons.
Yeah, that's a great metaphor.
Yeah, because the only thing is a single product economy. Okay, nobody can talk. Nobody can say anything he doesn't like. Okay, and maybe women can vote. Okay, but that's it.
Right.
It's got an economy with a lot of problems. Now you walk into Ukraine or Crimea. You see what Medvedev said yesterday? They're even worse. So here he's got a big challenge in front of him. Now how is he going to fix it? Excess cash. Why does he get the excess cash? Price of oil. What did we do this week? We drove up the price of oil. We got to get Foggy Bottom, which is the State Department, and White House better analysis and better executions. Because believe me, the guys we've elected to run the show on both sides of Pennsylvania Avenue, they're a bunch of fossils. They're making the same mistakes again.
Okay, how about turning to the Middle East? That might be your bailiwick with your heritage. What do you think? What do you think is going to happen between the Israelis and Iran?
Well, first of all, I want to. You have to understand. My dad was a fighter pilot under the Shah. Was one of his pilots and was the chief pilot for the Crown Prince.
Okay.
So two things. He was a good pilot, obviously, and he was a trusted individual. It's another war to have the Crown Prince to take the Crown Prince around. That's where we come from. It was also graduate first in the Air Force Academy in Iran, and then was educated in England, Germany, and then U.S. And he went to SOS in that Squadron Officer School in Alabama. And then he was awarded by Nixon Legion of Merit.
All right. So did you guys, your family left after the fall of the Shah?
We had to. Right. So I do want to. It doesn't have to be a kingship in Iran, but I do want a true democracy, and I want theocracy out of it.
Okay.
Religion has to be out of this. That's a big change for Iran, because why? Democracy has different meanings, and it has to do with the level of education. Unfortunately, because of the resurrection of Islam, if you will, and religion, it is in general religion in that area, which goes back 200 years plus due to the British Empire. The mullahs got a lot of footings there, and they're very strong. They're holding it. They're holding to a power. The same way that Israel, with the help of French atomic engineers, got the atomic bomb at the Diamond and with this the stuff stolen from TVA, Tennessee Valley Authority, Iran has built some nuclear weapons that, or at least close to it, and that's their insurance policy. That's what Shimon Peres did. Read all the books; they're all there. No difference, except the difference is Iran has signed NTP, Non-Proliferation Treaty. Israel has not. Okay, and they have 200 nuclear weapons, and some of it are German submarines in Persian Gulf. I don't think Bibi Netanyahu is any risk. It's just a talk. The part I have a problem with Bibi is that he tells us what to do. Wait a second. Last time I checked, if I'm writing a check and you're the help, I do the talking, not you. So he comes here to Washington, tell us what to do. I have a problem with that because we're writing a check to him. That's why I say on Twitter, Bibi, when the next time you write the check, we'll listen to you. Okay, that's why.
Okay.
But
yeah.
Now, at the same time, I'm glad Ahmadinejad is out of the picture because he's an idiot. Okay, he's an idiot. He inflamed everybody, denying there was Holocaust. I mean, come on, get real. Those are problems over there. The other thing is that to me, and this is our failures, by the way, let's come to failure. The road to regime change in Iran starts in Damascus. We need to have regime change with Assad. We haven't done it.
Yeah.
And we drew a line in the sand, and we let him cross.
Yeah, we let Putin fill the vacuum.
Exactly. You know why? Because we have an amateur-in-chief in 1600 Pennsylvania Avenue. I think if you look at it down the road, Obama will come down as one of the weakest presidents, least decision maker, with no experience, 2 years as a senator. Why? Change? Promise? Come on. We need experienced people to do the right thing. Okay? Both. You're experienced and doing the right thing. So, I'm very disappointed, to say the least.
Yes.
And this is the other problem. Iran is not Iraq or Afghanistan. Okay? It's 3 times plus size of Iraq.
Right. Okay?
It's not something you can take over. The only thing, you cannot bomb away Iran. It won't go away. Okay? Yeah. For 3,000 years, 3,500 years, been there. Yeah, obviously I don't want any bombing in my motherland, if you will.
Right.
Especially with some of the weapons I helped build in my adopted country. You know, at Northrop, I worked on B-2 bomber, I worked on F-18. But it is what it is, and people in Washington will make decisions. I can't change that. You know, I'm here. Right. But my point is, I do see dichotomies in decision making. I do see a lot of mistakes. You know, I was a student of Woodrow Wilson School, same school that David Petraeus went there, head of CENTCOM, and then head of CIA. As a matter of fact, I met him here in Chicago. That's what we talked about. They teach you there the limitations of nuclear diplomacy. And here, we have an asymmetric war. If you think Israel is having a problem with the suicide bombers, wait until the U.S. try to do something with Iran.
Yes, I've read about that.
Yeah, it's massive what they have built. Iranians are not dummies. Look how they have survived and how they have self-sustained against. You know, we give chemical weapons to Saddam. There's a big picture of Donald Rumsfeld, not a Princetonian. Yeah, with Saddam, we gave satellite info. We gave ingredients for the chemical weapons, and some biological came from Germany to Saddam. Could they get into Iran? Not more than 40 or 50 kilometers. And they were pushed back very strongly.
I want to switch. I want to switch gears just a bit. So you're talking 2,000 in the S&Ps this year. With everything that we've just covered, with your disappointment, the vacuum of leadership out of the U.S., all the other potential problems we've talked about that are unresolved, do you see the potential for at least a correction from the 2009 lows to wherever the highs come in, as some type of reset in the market coming?
Not a major reset, but adjustment is needed. Let me show you something here. Hold on. Let me come back.
I mean,
here.
Even a pullback to 1,400 S&Ps.
1,400? No.
Would not, but it would not break the back of the bull market.
No,
it'd be 38% back.
Look, the biggest problem we have. You see this move here?
Yeah.
Okay, that was Friday.
Right.
Where are we now? A little bit higher, but look at the move there, and look at almost the. We came back to the scene of the crime. You see that low?
Yeah, I do. Yeah, late Friday.
So how do we? No, midday Friday, or what time is this? This is that's the hourly chart. Yeah, midday Friday. Yeah. I'm sorry, you're right. 2 o'clock. Yeah, 2 o'clock was the low. Right. Here we go. So that was a 6 hours travel. The same guys who pulled it up pushed it down.
But it took longer to push it down than for it to go up. Is that your point?
Good point. Good point. No, not necessarily. But my point is, market needs to move around. Nobody makes any money if it doesn't. Especially people who have long vested interest. Even they need some change. Why? Maybe be long Microsoft and Apple and Google, but they're trading because they can't get bored. They have to be there. Look, they say if you want to make money, you got to be in front of your screens. You can't go to the beach and make money.
What about the recent weakness in what was leading the way last year? The high beta stocks, Nasdaq, Russell, giving up a lot more on last week's decline than the Dow or S&P.
That's the sign that big boys are hiding in S&P.
Right.
Yeah, because here, see this. This is your Russell.
Right.
Big drop there. We're coming back up to this is all-time high line, by the way, the gray line. Okay, so we're not coming up. This is normal. This says a beginning of a press down, a kind of an adjustment. But I just don't see 1400. You know why? What's the catalyst? The economy doing better. Okay.
Margin debt.
Well, yeah, margin debt could be high. I understand. But look, there's still a lot. Look, I think the purpose of the market now is, if I read this right, bring more of the people on the sidelines back in. There's still a lot of people on the sidelines, non-believers, because they've been burned so many times.
Right.
Do you think they have a stomach to be burned one more time? I don't think so.
Well, I have been more than. I don't call it burned. I don't like. When people say the market burned me, I go, you mean you were wrong about the market. To me, being burned is like being caught up in a fraud. It's not being long during a bear market.
Dale, you're 7 Sigma. You're not the average. You're not in the belly of the curve. You're a tail risk.
Okay.
You and I are the same. We're tail risk. We know too much about the market. So what you branded as that versus the average Joe Blow out there, no.
Yeah, they feel they were burned.
We're in front of our screens all the time. But what's in the market? Dentists, lawyers, mechanics, people in the unions.
Right. Okay. Yeah, you're talking about pension funds and so forth.
Everything.
Like they have a God-given right for markets to rise until they retire.
Exactly.
Okay.
Exactly. See, that was another problem. We have broken that covenant with the pension funds and all that on the upside, and also with the retirees on interest income.
Yeah, completely. This has been.
Go down to Florida. See what they're up to. Go down to San Diego. See what they're up to. They're all pissed.
Yeah. Yeah, because they were forced into the risk curve, and it wasn't in their mandate.
Well, now they want more income, and Treasury and Fed won't let that happen because if we let the rates rise, we can't. The budget will be busted. We can't do that. Remember, we're not cutting back on a debt. Under Obama, we have almost doubled the debt.
Right. So why?
Now, some of it was, I agree, was caused by Bush, and some of it was off the balance sheet financing that Obama, as he came in, he said, "I'm going to do." He said what he's going to do. He said, "Look, we're going to pay for the wars. We're going to account for them. This off the book financing we got is not a smart way to go. We need to get the totality." The bottom line is this interest expense is huge right now, and if you tick it up, bust.
Yeah, long bonds yielding 6% could put us in a major crisis. Is that what you're saying?
Well, also, if you get there, FF, federal funds won't be at zero. The bigger problem is going to be FFs because there's a lot more finance up front than more finance on 30 days and 90 days on rotating versus out there in 30 years. So the short term is going to be even bigger problem.
Okay, well, Fari, it was a pleasure speaking to you, and you opened my eyes to some things today. I hope we could have another conversation down the road. You want to show your website? I encourage people to follow Fari on Twitter at Hamzei Analytics and visit his website and keep an eye on. He's got a great team. You have a great team with you. You're not a solo act, are you?
No. I have Brad Solomon. I got Jim Uriel. I got George Cavaligas. Ethan Primark, Pius, Hendy. We have a full team because there's no way we can cover one item. And look, we didn't get up here. If you look at Twitter, we get up here and look out for you. I cover.
Yeah.
And this mainly news people there.
Right.
Basically, by being upfront, three things we offer at Princeton, not Princeton, at Hamzei Analytics, and that's very simple. Three things, three T's: technology, trading experience, and most importantly, transparency.
I knew you were going.
We're transparent to a fault.
Thank you for counterbalancing all the hype that's out there, Fari.
We're just a human being. We make a lot of mistakes, but I'd rather you hear that from me than read it in a newspaper.
Well, I always say, Fari, the difference between pros and amateurs are pros know how to lose, so they have money left to be right with.
Fair enough. Yeah, I say it's the size of the loss. Pros will have manage that loss much better, so lose less. The public or novices, they bet the farm. And my bet size is between 1% to 2% of a net asset on the books that I do. More than that, I get nervous. You know why? Because that takes me 50 to 30 times being wrong successively to blow up between 2% and 2%. Yeah.
Right.
And if you have remember, trading is like game theory. It's the expected value of the system. If the expected value of the system is positive, you can't go bust. As long as you can repeat it. But if you put a big bet, you can't repeat a big bet. You're done. Finito.
Inshallah, Fari.
Yes, thank you very much.
All right, buddy.
Thank you, sir. Thanks for having me. It was a pleasure and honor.
Thank you very much, Fari. We enjoyed it. Thank you, my friend.
Bye-bye.
Bye.